Key concepts on the closing process. Hi, I'm Justin Lake from Think Numbers, and in today's lecture we're going to be talking about two very important concepts that you'll need to understand in order to complete the closing process, which is cutoff and the period. Let's start with the period. Okay, so it's pretty straightforward process what the concept of period means. Let's have a look at this diagram here. We represent the beginning of the month of June, which is the beginning. Okay, and then time passes and then you get to the end of the month. That is the June period. Okay, you then come into a brand new period on the 1st of July as soon as the calendar date clocks over, and that goes until the end of July. Again, that's another period. It's as simple as that. It represents a time period. Now, let's pretend that you receive an invoice. Okay? However, you receive this invoice just after the end of the month, but it says that it relates to June. Where would you book it? Would you book it into a July GL date, or would you book it into a June GL date? Well, considering that the actual time period that it refers to on the invoice says June, then you would book it into the June period, so long as your period is still open for accounting purposes. Generally, in practice, we leave our accounting period open for a few days after the month end, sometimes even up to a week after the month end, in order to finalise all invoicing. And so what that would mean is that invoice would actually be booked into a general ledger date of June and the cost included as a June cost. Okay, now let's now assume another example where a few days later you receive another invoice. However, the date that actually refers to is July, and you receive it in July as well. That would actually get booked into the July period and be represented in the July figures. But these invoices could have been received at the same time, but it's important that you actually distinguish which period it relates to. Now, the concept of cutoff is pretty similar to what I've just represented, in that it's basically the end of the period of time and making sure that the actual costs, all the revenues, belong in the correct period. Now, generally at the end of the year, companies that get audited, auditors would usually test for cutoff, and usually what they do is, from a supplier side, they would get a statement from a supplier, say for the June period, as an example, and they might look at what was actually on the invoice to tick it off against what's in the accounting system. And if they see a cost that relates to July that's in the June period, that's obviously an issue that's incorrect. Or if there's a cost that is in the that is on the June statement from the supplier that is in the July period and not in the June, then also that is not correct. And so then that would be something that an auditor would bring up as an issue. Okay, so anyway, that ends this lecture on cutoff and period. I hope that you've got a bit of an understanding now and you can utilise some of that knowledge going forward. Thanks a lot.